Today we are joined by Jörg Hoffmann, Head of Investor Relations at WACKER Chemie. WACKER is one of the world's leading specialty chemical companies, supplying innovative silicone, polymer, biosolutions, and polysilicon products to industries ranging from construction and healthcare to semiconductors, renewable energy, and personal care. Today, Jörg presents WACKER Chemie's first half 2026 financial results. Jörg, the floor is yours.
Welcome everybody to WACKER Chemie AG. I'd like to report to you about the second quarter that we just published Thursday on July 30th. Here we go. A message from our lawyers. Q2 was a quarter that was peculiar in that it was boosted by a one-off effect out of pensions to a level of 211 million euros in EBITDA, yet the underlying operational EBITDA at 175 was bang on the consensus and slightly up over the first quarter. This is better than what we had expected for the second quarter. EBITDA was markedly higher on cost measures, and net income showed a 350 million euro entry, of which 243 million came from Siltronic-related effects. Remember, at the end of May, we sold shares in Siltronic and now hold 7.15 million shares. Operationally, our PACE cost program continues to contribute. We saw a contribution of 45 million euros in the second quarter. That makes it 85 million euros in the first half. Volumes in chemicals were higher year over year and seasonally higher quarter over quarter, as we raised prices to match rising raw materials. Now, semiconductor demand stayed strong for the quarter in polysilicon, but solar was particularly weak because the US regulatory uncertainty and overcapacities in China continue to press on the market, and we significantly reduced inventories, which also pressed on the market. In terms of sustainability, you saw on the front page the screen. This represents the award that we got from L'Oreal as we are creating almost CO2 free silicones. And so this is a sustainability reward from L'Oreal. We adjusted our guidance for the full year for the special effect out of pensions and a little bit because of the better than expected performance in the second quarter. So our EBITDA is now expected in a range between 625 and 750 million. Sales mid-single percentage higher. That's a bit less than we had expected for the full year, as we expect markets to slow somewhat in silicones and polymers second half of the year. Net financial debt is now expected at 500 million. So that is substantially lower than last year. Obviously, the sale of Siltronic shares was a contributor here. One note here, our outlook does not reflect any significant changes or effects from trade politics, particularly the US rulings on solar and polysilicon. Now, if we look at the P&L, you see that the gross profit in the second quarter has climbed substantially. So this is where you see the cost program in work and the effects of higher volumes and so forth. So substantial increase in the gross profit. Again, EBITDA boosted by the 37 million. 37 million, by the way, out of pensions gets reported in others, and a substantial contribution from Siltronic, which you'll find in the financial results. Looking at the bridge, volume and mix year over year were the biggest drivers. Price less so, and we faced some headwinds from FX. Continues to be particularly strong. We've expanded shareholder equity here. We continue to keep liquidity at 1.6 billion. And obviously, we've picked up business in the second quarter and higher prices. Accounts receivables went up. Pension liabilities went down due to the capital option effects and also to higher discount rates. Very solid balance sheet. Let's go into silicones, our largest business. Silicones reported a higher EBITDA based on positive mix effects, stronger volumes in specialties, lower volumes in standards, and combined with effects from the PACE program. So sales were higher, price announcements, PACE program contributed. Our order book intake continues to, however, to stay somewhat volatile, but On the other hand, it is significantly higher than last year. Here you see the detailed outlook for silicones. Please note that we are upping the outlook here based on the strong performance in the second quarter. Polymers substantially increased over last year and the prior quarter, but a portion of that increase comes from inventory effects. In the conference call, the CFO said there was a small double-digit number. So if you take that out, it's still 20% higher than in Q1, largely because of higher volumes with an improved mix. We've seen some bit of a pickup in construction activity in Germany and in Europe, where we tend to sell products with a higher value add. So you see this here, and this is what meant by the improved regional mix. So sales were higher due to prices as we are passing on the raw material increases to our customers. And we are moving our prices now that raws are coming down again. We're moving the prices with them. This is a margin business. Year-over-year, EBITDA was strongly supported by the base program and also as in silicones, order book higher than last year, but it is a very short reach. Also here, outlook updated. Biosolutions, a strong performance. We had not expected this. I know it's small numbers, but it's a strong performance based on where we are, where we're coming from. And this is largely due to better pricing to offset higher raws, but also following very successful project businesses in biopharma. Cost management also helped. The outlook here stays the same. In polysilicon, it's a tale of two cities. As like every other quarter, you have a solar business which is kind of limping along, and you have a really strong performance semiconductor business. So semi volumes continue to grow significantly. Solar demand stays muted. I mean, customers don't really know what to do and where to go because of this uncertainty from tariffs. EBITDA was somewhat supported by cost savings, but we also have higher energy costs as the CO2 rebates that we got last year calculated and are no longer there. So, however, a significant portion that dropped the run rate from about 20 to about half that level was a significant reduction in solar inventories. We actually reduced our solar inventories by about 20% since the beginning of the year. And we're looking to do that further because, well, nobody knows where the situation goes. It's probably safer to run down the inventories. So we increase our sales forecast for the end of the year because we see semi volumes accelerating to double-digit growth, continuing towards the year end, continuing at that level. Well, solar stays under pressure. You will note in here that we make no mention of the famous Section 232 ruling and so forth. We do not want to engage in speculation here. Verdict on this section, on this tariff ruling in the US is overdue, and nobody really has a good idea when it comes out. Nobody also has a very good idea which way it's leaning. So we're just standing back and look at it. And once something happens there, you'll hear from us. Net debt, as you see here, is substantially down. You see a tiny cash flow from investing before securities, actually positive. That is because this is where the Siltronic share was sold. And so that canceled the CapEx in that quarter. And this is the end of it. But before I let you go, here's the explanation of all the specials. We do not do adjusted numbers at WACKER. We report the numbers and then we give you this table or another table of specials and you can decide whether you think this is special or not. We find it more than complicated if we have a couple of different sets of numbers, adjusted or not adjusted. But for clarity's sake, I want to make sure that everybody uses the same numbers. We have reported numbers and we have a table of specials. So you have the capital option here and the two different effects from the Siltronic transaction. One thing intellectually rather interesting is the dilution gain. Again, if you have questions about that, give me a call. I'll be happy to walk you through this and explain it to you. Until then, we have a Capital Market Day announced on September 17th in London. A ton of stuff that has happened in WACKER. As you can see, the huge contributions from a cost savings program in the last year. And so there's need to talk because WACKER has changed and WACKER has changed significantly. You see it in the numbers, but we're not seeing it where everybody's asking, and that is polysilicon. Polysilicon is contingent on the third-party decisions, which we don't have any control over. So we'll see how far we get. Until then, I would be looking forward to welcoming you there. You should expect the invitation over the next, or date to date over the next weeks. Thank you for staying with me. Thank you for your interest in WACKER Chemie. It was a great quarter. We've upped our forecast, but we're still operating in a difficult environment. Thank you.
Thank you, Jörg, for presenting WACKER Chemie's first half 2026 financial results. If you enjoyed this presentation, visit seat11a.com, where investors can discover management presentations, financial results, elevator pitches, and deep dives from listed companies across Europe, all in one place. Thank you for watching, and we look forward to welcoming you back soon on Seat 11A.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.